So there's been a lot of change at C3.ai. The CEO had to change, had to step down because of a health issue. The company's latest quarterly report disappointed stock market investors and the price dropped. And so investors really are curious about this company now, and they're asking me what's going on with C3.ai stock. So I was going to elaborate on that in this video. I'll also share with you again my fair value calculation for C3.ai, and I'll share with you my recent change in recommendation on the company since I digested the company's financial results from the most recently completed quarter. I'll do all of that in this short video. There's a lot to cover, so let's get right into it after a brief message from my sponsor.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
Right, so one of the biggest developments from C3.ai's latest quarter was the surprise decrease in revenue. The company reported $70.3 million in revenue, which is a decrease of 19% year over year. Prior to this, the company had reported several consecutive quarters of revenue growth and even some quarters of accelerating revenue growth. So this was a sharp turnaround for a company that had found its rhythm again after the declines in 2022. It had some difficulties and challenges, and then it found its way again for several consecutive quarters, and now it hit another major disruption, which set the stock price lower. The company said non-GAAP gross profit for the quarter came in at $36.3 million, and the gross margin was 52% on a non-GAAP basis. The company's non-GAAP operating loss for the quarter came in at $57.8 million, and their cash used in operations was $33.5 million. Free cash flow in the quarter was negative $34.3 million, when the company was expecting to be positive free cash flow when the cash flow situation had improved meaningfully. And again, so this was a major disappointment, a big turnaround. Still, the balance sheet remains absolutely pristine. They have a $712 million cash and equivalents balance with zero long-term debt. So they have an excellent balance sheet. So looking ahead, the management team is now forecasting revenue of about $76 million in the next quarter. And that's a disappointment because it's only a small sequential increase from the current quarter's disappointment. So they're not expecting like a sharp turnaround, a sharp return to growth in the upcoming quarter. So they talk about the appointment of a new CEO and the restructuring of sales and service organizations. They're withdrawing their guidance for 2026. They plan on providing guidance for the third quarter and full year 2026 when they announce their financial results in the next quarter. Disappointment to be sure. Whenever a company removes their guidance, it's not usually a positive thing. Usually when a company is experiencing positive results and they want to revise their guidance upward, they don't say that they're removing the guidance, they say they are increasing the guidance. So when a company removes a guidance and says that we're going to provide guidance again when we collect more information and get a better handle on things, when they come back and provide guidance again, it's usually much, much lower than where the initial guidance for the full year was to begin with. So they're giving some time, hopefully, for investors to digest these actions and realize that it's not going to be a quick turnaround, so that the reaction to these results are spread out and not taken all of a sudden, all at once. So disappointing to be sure. By the way, this highlighted conference call transcript that I'm reading from is C3.ai's Q1 fiscal year 2026 results and what management discussed relating to their quarterly performance and reasoning behind that. I've made this available for my channel members, and I have dozens and dozens of these now available for my channel members, and you can join for less than $5 a month. There are many more benefits. You see the link in the description for everything you get for joining. So let me now share with you my valuation model for C3.ai stock. So as I discussed, the near term, the abrupt reversal in growth, all negative and very disappointing for C3.ai stock investors. However, I saw that as an opportunity, and I recently upgraded C3.ai stock to a buy. The main reasoning being now that the stock price has sold off enough to make it an attractive risk versus reward for me. The intrinsic value per share I calculated is $32, and the current market price is $16.40. So a significantly undervalued price for C3.ai stock. And I mentioned that big change in recommendation because this is the first time I've had C3.ai stock rated as a buy. I've been following this company, I think, since 2019 or 2020 or 2021. It's been several years, and I've never had this stock rated as a buy. I've always felt the risk versus reward as being unattractive. But now, following these quarterly results on September 4th, I upgraded the stock to a buy. And so today, I'll update that recommendation and let everyone know that I still like this business. It's going to be a while until they turn things around, until the new CEO gets a handle on things. But I think the long-term opportunity is attractive here now at these new lower market prices. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.